First, a little background. Fannie Mae, or the Federal National Mortgage Association, was created in 1938. In 1968, it became a government-sponsored entity. Freddie Mac, or the Federal Home Loan Mortgage Association, was created as a government-sponsored entity in 1970. Both organizations were in the business of buying mortgages from banks and turning them into mortgage-backed securities. Now, some people don't exactly understand the difference between Fannie Mae and Freddie Mac, and for the most part, they're the same thing. The major difference is that Freddie Mac tends to buy mortgages from thrift banks, whereas Fannie Mae tends to buy them from commercial banks. Both Fannie Mae and Freddie Mac enjoyed a relatively privileged status as GSEs, and exactly what this is a little confusing for some people to understand. Government-sponsored entities are publicly traded corporations designed to reduce the cost of borrowing. These characteristics include holding government charters, having regulators in the Department of Housing and Urban Development and with the Federal Housing Finance Association. They are exempt from state and local taxes. Several of the board members are appointed by the president, and the Treasury Department can buy up to $2.25 billion in securities should problems arise. So that's the issue with GSEs. They were kind of like this weird hybrid. You know how centaurs are part man and part horse? Well, that's how GSEs were kind of like. They were part government and part business. And as a result, people didn't really know how to classify them. Remember how we talked about how investment banks bought mortgages from commercial banks and then securitized them and turned that into debt? Well, before investment banks were doing that, there was Freddie and Fannie, and they had been in the business of taking mortgages and turning that into debt for a long time. They would take mortgages, package them together, and sell them onto debt on what was called the secondary mortgage market. Now, why does the secondary mortgage market exist? Many mortgages take a long time to pay off. Banks that are waiting for a long period of time to get this full payment back would have to wait another 30 years before they could issue out another mortgage, theoretically speaking. When Freddie and Fannie purchase these mortgages and sell them off to a third party, they are giving banks the capital necessary to finance mortgages. When Freddie and Fannie buy that debt as a result, they free up commercial banks from waiting up to 15 to 30 years for a loan to be paid off. Banks could immediately offer mortgages to other people, thus enabling more families in America the ability to purchase homes. Fannie Mae and Freddie Mac were thus created to help finance the American dream. So they issued mortgage-backed securities and sold them to investors. One of the ways in which they were able to raise the money to purchase these mortgage-backed securities was through issuing what were called agency bonds. Issuing agency bonds are basically a means by which government service entities are able to raise capital. Now, it's important to note that government-sponsored entities are not the only ones that sell agency debt. They also are sold by government agencies and the U.S. Treasury. Now, although all three entities sell a type of debt, the debt they offer varies based on the issuer. GSEs tend to sell securities, agencies tend to offer bonds, and the U.S. Treasury offers Treasury bills. Where these products are different comes in the form of return and backing. The U.S. Treasury offers the lowest return, agencies offer medium return, and GSEs offer the highest return. In addition, though, the organizations have different levels of support. With U.S. Treasury and agencies, the government offers explicit backing on returns and debt. With GSEs, this backing is implicit. So what does explicit versus implicit mean? Well, let's start with a simple example. When a person takes out a loan, therefore issuing out debt, they are checked to see if they have the collateral to back that up. In other words, if I need to borrow $50 from Susie, I might tell her that if I can't pay her back, she can have my watch as collateral. Similarly, when most organizations or companies issue debt, they need to prove that they have some sort of asset or cash reserve to prove that they can pay back their debt if they can't pay it back the regular way. With the U.S. government, however, all debt is issued on the faith or the word of the U.S. There does not need to be a cash reserve or any backing of any sort. With explicit backing, if an agency or Treasury Department cannot pay for something, the government must step in and assume the debt. With implicit backing, which was the situation with Freddie and Fannie, it was a little more confusing. There was no guarantee on the word of the government that they would step in and cover their debt should problems arise. But since these two GSEs had the special privilege of receiving emergency capital from the Treasury Department, they believed, as did many of their investors, that the government would back their debt. The problem with GSEs was that they enjoyed the best of both worlds. Being part government, they could borrow money at lower rates, but having a corporate side allowed them to have higher yields on agency debt. This unique position enabled them to have advantages over their peers that were pure corporate or pure government. The result was that Freddie Mac and Fannie Mae, when put together, had a monopoly in the housing market. To review, Fannie Mae and Freddie Mac enjoyed a monopoly in the housing market and had many privileges, being semi-private or semi-public. Although they were not technically backed by the government, there was still an implicit guarantee. This implicit guarantee enabled Freddie and Fannie to take on a lot of debt. Coming up, what went wrong with Fannie and Freddie? Thanks for watching. To learn more or watch more podcasts, visit www.subprimethemusical.wordpress.com.